advancing its 100% owned Black Pine oxide gold project in southeastern Idaho. It's a past-producing open-pit heap leach asset, and its indicated resource just grew to 4.88 million ounces in a February 2026 update. The company is pushing Black Pine toward a Q4 2026 feasibility study and a record of decision targeted for January 2028 under FAST 41, a U.S. government initiative to design, streamline, and accelerate the federal environment review permitting process. The company has also streamlined its portfolio with the sale of Gold Strike and Gauge projects in Utah. Joining us today is Jon Gilligan, President and CEO of Liberty Gold. Jon became CEO and director in April after Cal Everett retired. Jon, welcome to Mining Stock Daily.
Michael, thanks very much indeed. I'm delighted to be here. Really appreciate the opportunity to have a chat with you and tell your listeners a bit about Liberty Gold.
The big milestone this year, Jon, I don't have to tell you, is going to be the feasibility study. Are we on schedule?
Oh, yes, definitely. We told the market, we've been very clear, October this year, and we're very comfortable internally. We're in that sort of final process where we're getting quotations for the capital equipment. We've done most of the engineering work. We're doing material takeoffs on drawings, and we're looking to start to flesh out those internal financial models. That takes about a month to get it right. So we're on track nicely for an October release.
Let's talk about that and the information that you're going to be getting into that feasibility study. Your published reserve is at 3.11 million ounces from your 2024 PFS. Your resource, as we indicated at the top, is now at 4.88 million indicated ounces. There was also, you were using an assumption of $2,800 gold price versus $2,000 back then for the PFS. When the FS reserve comes out, should investors expect that the reserve numbers are going to scale roughly with the resource growth? Are there other factors that you're going to be looking at? Strip ratio, pit design? What type of conversion are we looking here, Jon?
So that's a fantastic question, Michael. I think at a very high level, the scaling would be broadly in line with the resource to reserve from pre-feas. That scaling would be somewhat similar in feasibility. So sort of as an internal target for the team, I like to set the team targets of where we want to see things. You know, we'd like to see that reserve going towards the 4 million ounces. I think that's a good reflection of the expanded resource that we published, as you mentioned, in January this year. And I think that kind of nicely dimensions the sort of size and scale and opportunity here of this deposit. And sort of thinking in terms of what does that mean around metal production at the pre-feas, we thought this asset was sitting in a window of 150,000 ounces a year for 15 years. That was the sort of that we use that as this is what we're trying to get to. We now see that equivalent thinking in the 200 for 15 plus years, 200,000 ounces a year for 15 plus years as a sort of aspirational target for what we think the capacity of the asset is. So that should give your readers some view about what to expect in the feasibility when it comes out in October.
Let's talk about your shopping list that you mentioned at the start, because you're going out there and then you're kicking tires. You had a $327 million initial capital in the 2024 PFS.
Yep.
Construction and mining costs across the industry have moved a lot since then, Jon. I don't need to tell you, I have been talking to a lot of mining CEOs that are kind of rushing the way or really in these gold metal prices, quickly trying to advance their projects. You're also seeing labor as being a big cost driver. What are you seeing right now as you price this mine out?
So we're seeing capital cost escalation it's different across different items in sort of the shopping basket. We're definitely seeing pressure on construction labor. We're seeing some pressure on steel. We're seeing lead times, particularly on electrical equipment, getting pushed out significantly beyond the sort of 9 months that you might traditionally expect, 9 to 12 months. are talking about a sort of an operating window for the target. We're targeting to have our initial capital with a 3 in front of it. And so high threes is probably where it's going to come in, around there for the reserve, for the feasibility capital cost estimate. So, some 15% escalation, 18% escalation on that pre-feasibility number. And we would expect to see some increase in the operating cost as well. Although we've done a fair amount of work on operating costs, this project is more sensitive to operating cost than it is to capital cost. And so, we've done more work trying to optimize operating costs than to get that benefit longer term for the asset.
Explain that a bit more, why you're seeing that's more sensitive on operating.
Michael, it's not that uncommon to find projects that are more sensitive to operating than they are capital. Typically, capital constraints are associated with a policy of the company or its ability to raise money. And obviously, when you're doing a study, we all do a capital operating cost trade-off, and typically we try and keep the capital cost as low as possible. And so the cost that gets deferred out of capital goes into operating. But of course, the operating cost goes to your all-in sustaining cost of, in our case, it was around about $1,400 an ounce life of mine all-in sustaining. And that number it critically impacts your margin, obviously, above sales for whatever the gold price is. The more you're able to control operating costs, the better your margin. The better your margin, the lower you can drop your operating cutoff grade. Therefore, the more ore you have available, therefore, either the more metal you produce or the longer life of your asset. Initial capital doesn't have any impact on that at all. And so if you're trying to manage a longer term asset, the more you can do to control operating costs, the better long-term result.
Thank you, John. You did mention there was a bit of a lead time you saw developing regarding electricity components. You do have an existing 25 kilovolt power line to operations. I do bring energy up because that whole sector has been under stress just from demands for electrical components and the growth of the electricity grid. How much equipment do you have from the existing brownfield site? And do you suspect that that's going to be either a problem in terms of costs or in terms of long lead times?
Yeah, look, that power line was built and was there from the previous operation. The mine was operated in the 90s by a company called Pegasus. So that power line is energized and is operating. We identified power as being as a critically important piece quite early on, really when I joined the company about 5 years ago, and we entered into a series of studies and then ultimately arrangements with the local power utility, and we have a 9.9 megawatt load sort of scheduled in to the supply over that line, and we did this a few years ago now, scheduled in for our demand curve when we go into construction in 28 and ultimately operations in 29. There is sufficient capacity on that line for us to draw the power that we need, and we need about 5 megawatts for the feasibility design. So the line is energized, it's operational. We have our load in the supply curve, and we are very comfortable and very confident that we have enough electricity for pretty much all of the potential upside expansion cases.
Now, let's talk about your asset allocation. So at the start, I did mention that both Goldstrike and Gage were sold off this year. You do have one asset. Pros and cons, John, in terms of having that one focus. Do you need to add more assets?
Not at the moment, Michael. It's always an interesting conversation. Are you a sort of one-trick pony, or do you spread the load? I think with an asset of the quality of Black Pine, which is it's going to be a large operating mine, I think focus and putting a team with a very clear objective to take this asset from its sort of exploration discovery through that whole development piece, do the feasibility study, do the detail engineering, let's project finance it, get the permitting, and take it into construction. That's not cheap for a start, and to be successful, I think the more you can focus your team, your technical team and your management team on that one task, the better. We ended up selling all of our non-core assets, as you rightly say, the Gold Strike deposit, which is in southern Utah, and our Gage land position, which is a little south of that area. And we did it for two reasons. One, the focus conversation that we're having right now. But secondly, that enabled us to put non-dilutive capital into treasury. And we sold Gold Strike for $70 million of cash and $2.5 million in stock to Heliostar. And we sold that Gage land position for $2 million in stock to Blue Moon. Both of those stock positions have done very nicely over the last sort of number of months. And the $70 million in cash is in staged payments, of which we had 10 million come in when we signed the deal in April. Another 10 comes in next April, and then another 10 in October next year. So that's $20 million over the next 18 months coming into treasury, combined with the cash that we previously had in treasury, puts us in a very strong cash position, such that we are fully funded internally to take us all the way through feasibility, permitting, detailed engineering, and to get us to a final investment decision at the end of 2027. So we don't have to go back to shareholders to raise more equity to fund the project. And I think that's really important in terms of controlling the share register and not diluting your shareholders unnecessarily.
As you hit those talking about cash, as you kind of hit those milestones as well too, is in your experience as well too, how meaningful are those milestones, and then how does that actually term you in terms of protecting, in terms of being able to raise money at a good share price?
So look, I think the technical milestones are very well understood. And generally, if you have enough funds and you have the right team, and meeting those milestones at a given time frame is relatively straightforward. I think the permitting piece has more complexity to it. That is a process that is not out of our control, but it's in the control largely of others. In this case, the federal agencies and the state agencies. We, as the proponent, are obviously involved. And you mentioned, I think, when we started the FAST-41 piece, we as Liberty Gold applied to join FAST-41 as a covered project, or Black Pine as a covered project, and we were accepted into that process in January of this year. And the covered project status is sort of think of it as a full concierge service, whereby the FAST-41 team have dedicated resources that are managing, if you think about it, managing the federal government's internal process, the NEPA, the National Environmental Policy Act, which is the process that every major project goes through when there's an impact and you're doing works on federal land. That FAST-41 process we have seen has been really diligent. It's been effective in terms of aligning resources internal to the federal government, and also holding federal agencies to account against a timeline that is agreed. And our new timeline was published in March of this year. That's available to your readers and your listeners. It's on the U.S. Permitting Council website, and you can see very clearly what the individual elements of the permits are and who's doing them, and by when they're required to deliver on agreed milestones. And we found that FAST-41 process to be extremely effective, and we're very grateful to the administration for setting that up and giving us the opportunity for some oversight and overarching surety on a defined timeline. So we are quite confident that we will take it through the permitting process under the time frame that we have now, and that time frame ends up on the 5th of January 2028, with the U.S. Forest Service, who are our lead agency, delivering what's called the final record of decision, and that's the sort of go, no go, if you like, decision, which says, yes, you can do the project subject to the following constraints. And at the same time, the Idaho state agencies, the Governor Little, aligned the state agencies with the federal process under Fast 41. So the state agencies have also agreed by that date, January 5, 28, the state will also have issued all of its final permits, so that by January 28, we will have a project that's permitted and ready to construct.
Lastly, John, what's going to be our priorities in terms of de-risking as you kind of move towards those two milestones in terms of the feasibility study and the record of decision? What's that kind of one piece component that you really want to have you really want to have control of?
So the key thing, the key, with a couple of things on that one, Michael. First one is we have drills turning in the field right now, and they are doing what I call pre-production de-risking. So what does that mean in practical terms? The first 2 to 3 years of production, which is the payback period for capital, we're infill drilling that ground to upgrade the resource class from indicated to measured. And then we're doing some infill drilling inside measured, so we understand some of the short range variability, and that will allow us to really well characterize all of the ore that we're going to mine in those first 3 years, from grade distribution, metallurgy, geotechnical, leach characteristics. And so from a sort of a technical point of view, we're significantly de-risking that early ore supply, and adding a lot more confidence to be able to deliver the metal, which ultimately gets sold and then produces the financial return that we're projecting in fees. That, I think, is the single most important piece we're doing. One secondary piece on a technical level we're about to complete, and your listeners can look out for this in the next sort of coming months. We finished some very large scale column tests. So think of that as a large tube, a vertical standing tube that's 4 feet in diameter and 20 feet high. You fill that full of rock, and then you leach that with solutions, and that is a proxy or an example of how the overall heap will leach, and it's a sort of a commercial trial to prove that the test work done at smaller diameters is realistic and valid. And we are largely complete with that process. We're very comfortable with the results, and that sort of is a final validation of the process technology. So we've got them, we all supply validated. We've got the process technology validated. That largely de-risks the technical point. I think on the permitting side, perhaps not to reiterate myself, but we think that the Fast 41 is a significant de-risk on the time frame to achieve the permits. The technical work, in our view, is de-risked in many ways for Black Pine, because we have a very straightforward environmental footprint. And what do I mean by that? This is a previously producing mine site. So there are legacy open pits, there are legacy waste dumps. And so it's a brownfield startup site rather than a new greenfield site where you're looking at sort of disturbance of pristine viewshed. So this is a previously disturbed site. So we don't have any surface water. This part of Idaho has no surface streams, no lakes. So we have no aquatic species, no fish to impact. The mines themselves, they're open pits, and all of the open pits that we're going to mine are above the water table. So we don't have any pit lakes or pit lake chemistry or pit lake evaporation. We have dry slopes. So from a technical point of view, that's better for slope stability. And the rock that we're mining has no sulfide in it. It's a fully oxidized rock column. And that means that we have no potential for acid drainage off the waste dumps. So it's a very benign rock mass, and it's the ideal place to open a mine. So, from some of the things that can trip up other projects that have, some environmental issues, we don't have any of those hot button items. And clearly we're going through the full process, but we think that in itself is a big de-risking of getting the permits in the right time frame.
John, you told me at the start of this interview, before the interview, that you're in the middle of your AGM, but we do appreciate you making time for Mining Stock Daily to tell us about Black Pine.
Thanks very much, Michael. It was a pleasure talking to you.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.